Gary, great to have you back on InvestorStream with the news that Borba is a productive well. Now, any way you measure it, it's a fantastic outcome for you. So first up, a few highlights on how the well is performing. How do you plan to flow it in the next few days or weeks? And what are the options you have and the time frame as well for a tie-in into a pipeline?
Thanks, Alex, for the opportunity again. And it's great to be back on the back of such a good result. To quote our driller, the first words he said after he fired the guns to do the perforating for the test was, "This well is a rocket." He was very, very impressed by the almost instant response on pressure and flow after perforating. So that was a good sign to start off with. Based on the 1.6 million cubic feet of gas a day that we've seen, and the pressures and the offset well data, we expect to bring the well into production at around 3 million cubic feet of gas per day, or 3,000 gas units a day. Now, the ongoing testing, it really just going to refine the information we already have, and the interpretations we've already made of the data, and particularly confirm the gas quality. Now, I don't expect a lot of surprises on that front. We're in the middle of a whole bunch of gas fields here that have produced for tens of or decades. We expect clean, dry, easy gas to get into nearby pipeline systems with minimal separation equipment required. So no real processing to say. We have at least 4 pipeline options, and our people on the ground are obviously now bringing those down to one that gives us our best early cash flow, and so that'll be done. Now, Alex, that I'm not a great one for commenting on timing, operational timing, because there are so many things that are not necessarily in our control. We have great infrastructure locally. Some of it's owned by us, and we work with very efficiently to get connected up as soon as possible. I'm expecting weeks, months, not years like you would face if you're in other jurisdictions like the one that we're resident here in Western Australia.
So can you take us through the basic economics here based on the gas price in California right now?
Sure, Alex. The gas prices are quite strong in California at the moment. They're around $4 US an MCF, so that's sort of pushing up towards $5 Aussie. Simple way to look at the economics is to say that for every BCF of gas, or every billion cubic feet of gas, or million, that is every million units of gas that we produce, we're getting $4 million US of cash flow. And so for a well like Borba, which may produce 5 BCF of gas, well, if you've got 5 BCF of gas, cumulative production, then the cash flow from this one well would be about the market cap of the 2 companies that are involved, in excess of $10 million US. Now, California is the 5th biggest economy in the world, battles that out neck and neck with Great Britain on any day, and it consumes more gas daily than the whole of Australia, and it only produces 10% of that gas. So it's a premium market, and that places us in a great place to be producing gas.
So, Gary, on your forward development plans, has Borba changed your thinking? Will you go after more shallower targets across your leases? And what's the plan for other field development work and other workovers?
Yes, Alex, that's an interesting question, because it sort of reminds me a bit of the Carnarvon Petroleum story that, when they went up to Thailand, they tried a couple of expensive, complex wells with high aims, and they didn't work particularly well, and so they then went back to their knitting and drilled simpler vertical wells and did very, very well out of it after that. Now, we've had a couple of swings to put the ball over the boundary, and that we've had we've done it very safely and we've done it very efficiently, and two, we've learnt a lot, and we learnt that there are a lot of gas saturated rocks out here. Now we will probably go back to in the short term focusing on the shallow rocks out here. This flow rate just shows you how prolific these wells can be, and after all, we're in a basin that's produced something like 13 TCF of gas out of the younger rocks in the basin, so it's not a bad place to go back to, and this has shown that there are still greater opportunities in and amongst the basin, despite that high cum production. So we'll go back and look at our extensive portfolio of wells in the Kyone and the Forbes, and then look at how quickly we can high grade those and start drilling them and looking for them to be cash cows for us into the future and provide some great cash flow that then will again allow us to go after some of the higher risk exploration wells in the not too distant future. We've just picked up an amazing aerial geophysical data, a couple of different types, and we'll be able to integrate that into our database and into our knowledge base. And I'll be really, really surprised if we don't find lots of new opportunities coming out of that analysis that will be done, is being done right now and will be completed over the next couple of months.
Okay, so turning to Canada now, from recent announcements, the assets are performing pretty well with Blue Sky and obviously and as the operator as well. How are you extracting more value out of these leases? And with the recent acquisition, are there some big oil targets you can go after?
Yes, obviously it's early days on those assets, and our operator is just getting their head around what we've acquired up there, and they're really going after increasing the daily production, because that's the biggest bang for our buck in the short term. We've got good oil prices at the moment, good gas prices, and so consequently, the more production we can get into the sales pipelines, the better off we are, and the better cash flow. And because we haven't paid a whole lot for those assets, we get our money back very quickly, and the cash flow starts to mount up very quickly. There's lots and lots of opportunities, both offsetting the production and deeper under the current production, for oil and for gas, big oil and big gas, when it's we look at it relative to our size, and we will pour through the data, high grade the portfolio of opportunities. We've got all the infrastructure we need up there that is owned to get the gas into production very, very quickly, and we will be helping the operator to high grade that and drive the production growth there. He'll drive the production growth there, while we high grade the opportunities, and then we'll use the cash flow from the production to drill the best of the opportunities and try and bring more production into cash, and that's the we expect to grow.
And now, Gary, just before you go, can you just talk us through the next 3 or 4 key value drivers for Sacgasco?
It's pretty simple and pretty easy, and they're obvious and achievable as far as I'm concerned. The first is increase the production of oil and gas in California and Canada. As I've said before, we've got the infrastructure, we've got the markets, and we've got good prices. And I'm from past interviews, I'm an avowed oil and gas bull, so I expect those prices will continue to go up. And I think those prices are going to surprise a lot of people on the high side. We've seen more and more predictions of $80 oil. I think $80 oil may be very conservative in the medium term, even in the relatively short term. So we do that. We use the cash flow from that production and sales to drill some of our additional prospects and development locations. And so we can monetize our proved not producing reserves. Just to have a look at the recent releases to see the size of those. We're reserve rich, and not all of it has been developed yet. So there's opportunities there. And perhaps the biggest driver of all to me is that I'm hoping, and we'll do what we can to get it into the investor's psyche that that we have massive exposure as a small company to an inventory of reserves, prospects, oil and gas drill locations, and future exploration opportunities, all within our acreage spread. And we combine that with our low-cost operations, and that's a massive driver. And if when we do all of those, I expect investors will see just how unreasonably undervalued our market cap is relative to the rest of the oil and gas market at the moment.
Fantastic, Gary. Always great to have you back on, and certainly with news such as this, it's always great to catch up and pick your brain on a number of topics. Thanks very much for joining me today.
Thank you, Alex. I enjoyed the opportunity.